Hey traders, welcome to Charts and Coffee. Hope everyone's having a good Monday and had a great weekend. Football, F1, whatever it was. We're taking a look at the second week of October as we kick off a look at the S&P and top tier outlook will be going out. Oh, has been posted. So shout out to the Trish boss for getting that up, and great way to start your week. Kind of align yourself to where the hot zones, the trends, and the focus will be as we get into what is still a fairly murky economic picture. And we have, it seems, every single Federal Reserve member at some point speaking this week, but not really. We have two big hot zones coming up. Number one, well, not number one, but just the first up is the CPI. And yeah, we can call that number one. And second Friday is going to be the University of Michigan inflation expectations. So both of these are going to land in the inflation category of what will influence the Federal Reserve's next decision, messaging, etc. The main thing right now is, do we hold for the remainder of 2023? It does seem most likely, but it's not improbable that we could get another quarter point hike, but it's pretty well discounted, meaning it won't be a shock. It's not as if that is not a scenario that is being ignored. It's certainly been discounted, just to a lesser degree than the hold. All right, so the other thing that we're looking at is the strength, for the most part, in tech. It's the only index of the main four that is above the 200. Gang, that's huge, because as we saw what happened in Q3 and a lot of the risk aversion that factored in, the NASDAQ was the only one that was able to maintain that very important level, the equator, stay in the bullish hemisphere, as I like to call it. And all three of the heavily weighted sectors, including sort of the ugliest of them, XLY, is, I would say XLY is about as ugly as it gets, but at least it's clinging to the 200, even though it's starting to show weakness. So this is the least of the top three. XLK, think Apple, Microsoft. XLC, think Meta, Google. And then XLY, think Amazon, Tesla. Now, here's the thing. Amazon and Tesla are doing just fine. It's the other consumer discretionary stocks that are struggling. So when you crack open the XLY, you look at the high concentration weighted names, you'll notice just how tricky that corner of the NASDAQ, that particular sector is. But for the most part, not much not to like in terms of what's happening to the NAS in relation to the other three. So it's not as if any of these indices look fantastic or in a great uptrend. But again, the NASDAQ is the relative performer. So we'll keep that in mind. The other big story was, what happened to crude, and is that sell-off done? And I'd say likely yes. After the onslaught of weakness, right now, there's a very clear message on two fronts from OPEC. One, that demand is rather high. Now, their window is out to 2045. But there's two big messages. One, there's not enough investment in oil. That's going to help, by the way, the stocks heavily weighted within XLE, OIH, and XOP. So get that focus back in oil stocks. And two, the production cuts, while not, they're never mandatory per se, right? They're recommended, but then the way in which each country within OPEC follows the production cut recommendations will vary, right? And so right now, it does seem that the production cuts are for the most part in place, the ones that they agreed to in June. And so there's not a lot not to like about crude, whether we look at those individual pieces of the story or ultimately where price is after that sell-off. And you got to wonder how much of This was some profit taking going from Q3 to Q4, a little bit of sector rotation, likely into things like XLC, XLK. But it doesn't mean that after a little bit of profit taking, XLE and XLK, for example, cannot move up together. They can, gang. Remember, sector rotation can be a couple of sessions. It could be a couple of weeks. This seemed to be a very short window. Energy is still one of the brighter spots, bullish spots in the broader marketplace. All right. So with that being said, as always, the best part of our show is your questions. And keep in mind, gang, while swings are back, we did get some nice follow through on Amazon and Chevron in the Sector Secrets Mastery, which is fantastic. What we want to remember is largely, especially when it comes to Russell, Dow, S&P, the heavily weighted sectors in those three indices, short term is still probably going to be the best, even though last week was a little bit on the more volatile side. And ultimately, we're going to continue on our path of bringing some more short-term swings in, but also sticking with what has worked really well over the last 8 weeks, and that is the 5-minute setups on our day trades. All right, so as always, let's get to the questions. Good morning. Great to see everyone. All right, and by the way, D. Bolton, yes. When we take a look at what's coming up this week, absolutely, we are rolling into earnings, right? We've got Pepsi tomorrow, which is really one of the consumer discretionary stocks that's been hit pretty hard within the XLY. Not a major stock in that regard, but certainly not one to ignore. But it's a hot zone at earnings within an already pretty battered sector. What gets interesting is as we get into Thursday, Friday, we start getting the bulk of really what would be considered the beginning of earnings season, and those are the financials you can see here. All right, so yes, absolutely. Can we get a list of all your channels and websites? Oh gosh, I don't know that I'll get into that now. I'll have to put a list together, but the best place to find me, aside from Charts and Coffee, would probably be two places. One, countdowntrader.com. Yes, gang, that's probably the best place to get continual content and links to a lot of resources. And the other would be my YouTube channel at Raghee Horner. But by the way, and be careful, please, when it comes to social. Look at the spelling, please, gang. Look at the spelling of the social channel. So what I mean by that is, gang, there is no possible way to stop the fraudulent activity done in any number of the traders here at Simpler, the fraudulent representation of, hey, I'm Raghee, but I'm really not, because I'm Raghee Horner, right? Please, the only way to stop this is education. Look at the spelling of the actual URL. So if you're on X, Twitter, and you see Raghee with 7 E's, or an M, or 2 E's in Horner, or 2 R's in Horner, that's how they do what they do. So pretty much anywhere on the World Wide Webs, I will be Raghee Horner. Check the spelling, and that will keep you out of harm's way, because there's a lot of people that are doing very rotten things in pretending to represent any one of us traders here at Simpler. So that's but I would start with countdowntrader.com. All right. Nike on a 1 hour. I'll tell you what, Mr. Walker, I am very uninterested in most consumer discretionary. And if I am looking at it, especially in the case of Nike, I'd be, for the most part, bearish, right? Now, if it's specific to the 1 hour, to your point, we do have a green trend that started to organize. That means that sinking into the gray, that's the support zone of the 1 hour, would be a valid setup. I can't say that I wouldn't prefer to be short, though. So if you were to say, Rog, would you rather the yellow or the gold zone of the daily price movement range, or the gray zone of the daily price movement range? I'd probably say I'd like the short. Okay. So or the long put. But to your point, specific to the 1 hour, it right now is a green, as you can see, multi-trend, which would suggest we want to stick to the long side on that particular time frame, which would map to usually, right, typically about a 1 to 3 day time horizon in terms of follow through, right? There's no way to know how long we'll be in a trade, but ultimately, the shorter the time frame, the shorter the time horizon, right? That life cycle of the trade. All right, next up is Shane is saying, yeah, know how to spell my name. Yeah. I mean, it's true, right? Almost every time someone reaches out to me and someone says, you've been hacked. That's not hacked. They're mimicking, right? I get that a few times a week, and people say, well, did you know? Yeah, go to TikTok. I think there's 100 of me. On Twitter, there's dozens. There's no way to keep up, right? There's absolutely no way. The best way to avoid getting scammed is know two things. Number one, I will never solicit you to manage your crypto, your Forex, or anything. I manage and trade my own money. I'm not going to solicit you for funds. On that's probably the biggest scam out there. Hi, I'm Raghee. My pretend me will chat you up. And I'll get friends from time to time say, hey, I'm talking with you right now on Insta. I'm thinking, oh my gosh, but and they know it's a joke. And I said, hey, string them along, mess around with them. And they do. But remember, none of us here at Simpler are ever going to solicit funds, tell you about some, great crypto or Forex approach we have and send us money. Never going to happen. All right. So, and then check the spelling of the name. And then you're going to see Raghee Horner 72583 is not moi. Right. So, yeah, know how to spell the name. Exactly. MU. All right. And I love the specificity on the time frames, gang. Love it. So, hourly. When it comes to MU and when it comes to what's happening on some of the semiconductors, I mean, they are above the 200. Semi is not in a downtrend. When we look at some of the things like AMD and NVIDIA, hard to be bearish, but there are a number of names. But I would not look at the daily time frame, Larry, because we're nowhere near an actionable level. I would say keep an eye on the 1 hour and look for a pullback to buy, maybe between the 200 propulsion around 68.5, or maybe the 68 even level where we have a Darvis 2.0 level sitting. All right. Thank you, Larry. Let's see. Plotting profit says I was tracking CRWD for a breakout of 172 Friday. But Friday came out of one Friday came out of nowhere. Should I be looking for a pullback or did I miss the boat? So first of all, daily CRWD is in a sideways environment. Above the 200, the trend that preceded the chop was up. So hard not to be bullish, right? So I'm with you on expecting more upside. The next challenge is which time frame am I going to use to set it up? And I would say I'd focus on the 1 hour because plotting profits in the 1 hour will give you that nice nimble 1 to 3 day time horizon. And right now it's offering a nice green trend. So did you miss the boat? I don't think so. I mean, a healthy trend will retrace, but there's no trend yet on the daily. What I'd keep an eye on is perhaps the hourly in this situation. All right. Next up, NVIDIA. Yeah, PJ, I'd focus on MU in the same way I would focus on NVIDIA. Just try to find the relative outperformer. And it's easier to do, a relative outperformance is not about a percentage of gain versus everything else. That was a great question we had yesterday in Top Tier Outlook, which, by the way, is available. The replay is available on both my channel and the Simpler Trading YouTube channel. And it's not about a percentage of gain. It's about which one of these has structure that's better than others. Better for me would be a trend. Uptrend or downtrend is going to be preferable to a sideways market, which is to say the lower row of the multi being green or red is preferable to it being yellow, right? So I'm always going to prioritize trends. And then I'm going to prioritize chop that's near an overbought or oversold level. So that's the way I would look at that. And I'll have to wait for a relative outperformer, PJ, to show itself. Would I consider the FOMC meeting minutes to be a hot zone? Yeah, the Wednesday, 2 p.m. Eastern? Absolutely. Yeah. Oh, absolutely. It will be considered a hot zone. It must be, right? So if FOMC press conferences and rate and the rate statement, et cetera, this decision itself is a hot zone, think of minutes as sort of this peek behind the curtain, not going to be necessarily as impactful as the release itself, but it could be very impactful, especially when you consider the minutes will include dissenting conversations, other, well, parallel but not necessarily dominant opinions. For example, if there is someone who thinks they should pause, it will be usually in the minutes. If there was someone who thinks we need to hike, it will be in the minutes. So we'll be able to see a little bit more of a deeper look into what the conversation is. That's the idea behind the minutes. But nonetheless, it will be important because the whole idea right now is, do we have an idea of whether or not we're going to see a tighter timeline to the cuts? Because right now they're still sitting out in July of next year. And the fear is that higher for longer, fueled by, in many ways, jolts, fueled by, in many ways, non-farm. We had two big jobs numbers coming out already. Now we get two fairly significant inflation metrics coming out. So are those in line, right? The good data is still going to suggest that the Federal Reserve can keep rates higher for longer. Now, if the inflation numbers are lower or flat, that means that their job could be done and they don't have to keep rates higher for longer. So that's why these data points, especially with jobs, especially with inflation, these are the two main macroeconomic pillars. They're the two main mandates for the U.S. Central Bank, which is why we keep an eye on these pieces of information in a way that would even supersede earnings, quite frankly. Earnings is a volatility event, gang. Earnings is not a macroeconomic event, right? It's a volatility event for that stock. And that stock could have a disproportionate influence on the index or on the sector, but it's not a macroeconomic event. Macroeconomic event is going to be really, for the most part, compartmentalized into significant jobs data and significant inflation data. And we're going to get some significant inflation data this week. All right. So that is where we sit in terms of that FOMC. So that will be important. CPI and, like I said, University of Michigan preliminary, not the final, the preliminary inflation expectation, which has been more important, frankly, than the consumer sentiment that comes out of University of Michigan. All right. So as we start off our morning, just a quick mention of something we've been talking a lot about in previous free videos, both at my site and at the Simpler Trading site on where is it? Let's see. Do I have this here? On Friday, I did a video called "Do This the Next Trading Day" or "Do This on Monday," and check that out, gang, because I go through a lot of detail about, as the bell rings, right? What's the focus? As the bell rings, what is it that I'm looking to take advantage of? What is it that I'm going to focus on to get that sentiment read within the first 5 minutes, even pre-market, right? Right now, I've got a neutral Russell, neutral Dow, neutral S&P, and a neutral NASDAQ. So that's what I'm inheriting in terms of that market structure, market trend. Then we'll start taking a look at that 5-minute range. Check that out. Last couple of videos, I've gone into a lot of detail about, look, gang, this isn't about magical levels on a chart. This is about, can I see where the sentiment is? And do I understand where that reading is coming from, right? True transparency, not in words only. True transparency is about, hey, here's my process. And hey, I happen to have automated it. And then here's a sequence of decisions I'll make based on that. Check that video out. It's going to give you a tremendous edge on the morning, finding those sentiment levels and knowing where price is in terms of their relation to it. All right, gang. Put those two simple things to work, right? Just requires a little bit of manual understanding of what's going on in the chart. Always know how to do what you're going to do manually and then go about automating something, right? Black boxes will fail you at some point because psychologically, we don't know why they're doing what they're doing, right? So remember, always understand what's powering the decisions you're making. That includes your indicators. All right, gang, have a great one. I will talk with you tomorrow, same time, same station. Be good to each other.